Welcome to TradeTheMBI.com. This is John. This report is for the 8th of April. Well, again, this is something close to what we talked about. We finished on the positive side for Thursday, leading into Friday. But to me, what's interesting again is what I was talking about from yesterday. So we had a low of 44.50, matched that low. So we didn't make a lower low. We did make a lower high than the previous day, but closed above. So a completely mixed signal within that construct there. And that's why we're just kind of moving across within this after having the big pump. It's just going to be a question of when they can capture more for a short cover to push or the opposite going down. And that's the battle. And from a Morganacci standpoint, look, we got double weakness here. You got magenta below yellow, but you also have now white pivoting below. If white had started to accelerate, would have been one thing, but it's fighting that rising gold shakeout, which is usually pretty decent from a trend category. And now you have a complete reset of shakeout. So any turn around to the shakeout to the plus side, you're looking at a new set of highs. So keep that one in mind. I know despite all of the realities of the world, that's not necessarily how the market operates. NQ, likewise for the NASDAQ here, almost identical readings from that construct. And again, we talked about this one too, where the orange starting to fade down. Now, if it pivots back up, that's where I would expect the next move lower. And the question will become whether or not the NASDAQ can match a return of the S&P, which would give us an indication that the broader market may be moving into more growth stocks, and that is starting to capture a bit more interest versus speculative plays, particularly if interest rates continue to rise. That's going to give alternative yield prospects for a lot of people from a safety standpoint, and they'll take that safety over potentially higher yields, even the fact though that right now you're looking at negative returns with inflation. And from a euro standpoint, okay, we're down in the 1087 range. So it starts getting closer. There's still a little ways to go to get into the danger zone, so to speak, for currencies and that. But I mean, the handwriting's on the wall. It's just a question of when, not if. From a gold standpoint, again, sideways action. So you imagine you look at the numbers and you think, how is it they're able to maintain sideways action, and that's not continuing despite given the fact that inflation is not abating at all? Well, again, a lot of it's traded in paper, and you can just flood demand with that, and that will create net reductions. So it doesn't really reflect what's actually happening with real gold itself, but that's what the market trades is. The same thing we talked about with Bitcoin futures and things like that. Exactly how that operates. Oil, still below 100, so that's a help. We're at the lows of where we've been in the peak, which is still too close to that 100 range, which means you're not going to get any abatement in the price push. You're just not getting any new pressure upward for price, so that's helpful in that standpoint. All right, so what was the low right there? 125.41 was the low on TLT. So how long ago was it? Back over here, the end of last year, and I kept talking about how we were going to get to the 125 range, and we didn't close there yet, but that we will, and it should actually continue to trend lower there from there. But significant, because people will say, oh well, none of this was foreseen. It's like, that's just nonsense. It was obvious. It was just a matter of how long it would take for it to resolve, and in what form would that take. And here you have it, rates for the most part rising to match inflation, regardless of what the Fed's doing. And that's a critical one. So from a Bitcoin standpoint, while it's still maintaining very healthy in these ranges, there we go. You're going to get these spikes, but it's been leveling out, and not a shock there. Really, what's got to happen to it is as more of the questions are resolved about sanctions and various things like that and workarounds. Never thought that Bitcoin would be the use for getting around Russia's sanctions. That was always more likely going to be gold or moving into an alternative currency like the Chinese yuan or something like that. But that doesn't mean that it hasn't provided a stability within Bitcoin. And I think that that's something that we're seeing from a relative support range within the price. So it's worth noting. Just the question becomes, usage and the ability to actually, conduct regular commerce, not just odd transactional commerce. From ETH, Ethereum, back and forth action, still fairly healthy with that, but catching a little bit of a bump back and back over that. Once it got back over 3K there, that was a significant move forward, and just like Bitcoin holding in the 40s, it's actually for it was around 36, but those have been critical areas where they've seemed to garner interest. From a 50K standpoint, so the turnaround signals of the magenta rising along with the blue over gray setup right there. We also had green moving to the plus side, took the buy entry from that one and was correct on that and was still above the 50%. Declining 100% means price has been pushing towards it. Pretty close to it as it was, but we're still well over 45. Again, 45.50 was that number where the bear case gets really scary, and that could force the capitulation of the bear side of the movement as things continue to accelerate, in which case then the bulls become very vulnerable by the time they get into the 46 range and stuff like that. So it's some interesting dynamics as far as the market is always going to do exactly the opposite of what the majority crowd pushes towards, simply because they have to trade against that position. And they certainly have much more liquidity when particularly it backs the Fed's direction of things, and only they know what it is. So here from a 5K standpoint, you see how choppy the action got all off that 44.81 previous algo level. So it's sort of like a trade a little above, trade a little below, and that's exactly how they capture significant positions. And then once they've loaded enough of it, you break out from it. And it's exactly what happened towards the end of the day. Some positive extremes were within that, and those filled back in after hours right here and pushed right back up to the highs. And that's where we're currently at right now, coming off those, ready to retrace to 50%. Rising gold, so it should support fairly decent on that one. A lot of good stuff, and the ranges continue to be excellent, but as I was talking about, there are becoming more ranges where that volatility is designed to decrease participation and therefore dry up liquidity, which conversely moves people into more secure safety like treasuries, which is exactly what the Fed needs. They need to do it in large quantities. So I would not look for things to slow down, but to accelerate from a volatility. It doesn't mean that the final resting price is going to change all that much, just that you're going to end up with those significant moves for that purpose. So be aware of it and take advantage of it. As always, though, trade well. We'll talk again later.